Well, happy Friday, everyone. Welcome to our Trading a Smaller Account class. I'm Connie Hill, sitting in for Barbara Armstrong today. I'm sure she's goofing off somewhere because Barbara loves to have fun. So wherever she is, we'll hope she's just having a great time. I'm happy to be here. How many of you have ever had the thought of, this trade's gone bad on me. How do I fix it? Has anybody ever experienced that before? You know, with some of the kind of ricocheting and whipsaws we're seeing in the market, I'm willing to bet there are some of you that have had occasion that you've thought that. Feel free to answer in the chat if this is something you recognize in yourself, because we're going to address that a little bit here today. Now, I am joined in the chat by Scott Thompson. He's one of our coaching managers. Some of you know Scott from way back in the day. He's here to help maybe fill some questions I can't quite get to. But if you have those questions, ask, because I'll keep my eye on the chat. We want to make sure you get your questions answered. Now, those of you that are listening to this on the archive, we know there's lots of you that do. When you have a question, put your question in the comments section in YouTube. And we'll go back throughout the week and just get your questions answered quickly as well. Now, I hope you're following me on X. I'm Connie Hill CS. And I'll do a lot of posting of content throughout the day, little nuggets of things I might have noticed I'll pass on to you. So give us a follow, it's free. Let's go through our disclosures here, and then we'll lay out more specifically our agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about here today is intended for education and information only. Don't consider it a recommendation. The Paper Buddy software application that we're going to be using here today is for educational purposes too, only I should say. I think it's helpful as well to use as your learning strategies, right? To do it in a paper account, not in your live account. Past performance is no guarantee of future results. Now, we'll always just kind of take a quick look at the market, see what's going on. We're going to do a lot of examples. We're going to do some management of trades here today. But this is a special class where we have some rules that we try to follow in the class. So we're assuming we have a smaller pool of money starting out at $20,000. Max position size that we're going to do is put $5,000 into any position. That more likely would be a stock position, but doesn't have to be exclusively. As far as our risk goes, we really do not want to risk more than $400 to $500 a trade. So that means we're going to have smaller positions. Maybe we are only trading one contract. That's all right. We don't mind doing that. Time frame, not really looking very small or long term rather. We're looking more short to intermediate time frames to trade. We're going to go both bullish and bearish. Okay. Some of you, actually maybe not even some of you, probably all of us at some point just started out with a bullish approach. And after we got pretty comfortable with that, then we started bringing in some bearish strategies, which has been so helpful over the last few months. We've had those to go with. So bullish strategies that typically we'd focus on in this class: long stock, long call, short puts, buy rate, covered call, short puts, and long verticals. You're going to see possibly some of those. And then bearish strategies: long puts, long put verticals, short call verticals. These are going to be the main strategies on the bearish side that we're going to take advantage of. Sometimes we'll talk about iron condors or calendars, which are a little bit more neutral. And so sometimes those will play in, but I'm going to say the lion's share of our strategies are going to be in these spreads. So let's go take a look at the market. Let's see what's going on. And I'm imagining that most of you try to track that throughout the day. Like, I'm not going to show you anything that's a big surprise, probably. All right. Here's our SPX. Believe it or not, this is my cleaned up version of this. What's going on, and I only have that blue line as a 10-period moving average to give us an idea what is the very short-term moving average looking like. So this little blue line has turned the corner. It has started going up. As far as what we're looking at here, I've got a Fibonacci retracement level here, and the last, say, 3 days, it's kind of been hanging around that 61.8 level. After having come down and touched at about the 38.2 level. That's as low as it went before starting to run back up. So do we have a higher high and a higher low? Well, here, this candle right here would probably say, yeah, that's our higher low. We've got that in place. Our previous peak is the day we had that real bullish activity right? Everything in the world had turned rosy for us in markets. Huge day, but we're looking to see if the SPX can make a higher high. I would say right now it's kind of an equal high and hasn't quite been able to punch through there to give us a higher high. And right now, let's see, looks like we're up ever so slightly, 0.06% right now, which is not a whole lot. I'd call that kind of a neutral market as we look at that. Now the NDX, very similar. This is my cleaned up version as well of the NDX. And similar thing, like all the indices that fallen below the 200-day moving average, the 10 simple moving average here is about the same, kind of in the same place that the SPX is. Has it formed a higher high? Man, it's trying to today, right? Here is our peak on that big bullish day. And sorry, that's kind of a crookedy line, but it's kind of just up in that area again. And so we're still saying, hey, can you punch through and make a higher high? If the indexes can do that, then we may have some turning a little bit, right? Maybe the very beginnings of an uptrend. It's got to start with a higher high and a higher low. We've only got the higher low up to this point, okay? Let's clean that up and take a quick look at our VIX. And hopefully, that's the volatility index. When the VIX is high, things are quite volatile. People are concerned, they're scared. It has been in some higher ranges. I know we had this huge spike in volatility and the market was incredibly bearish, huge sell-offs, right? But it has settled down a little bit. 30 is kind of high. This is a 28 line right here, 28, 29, 30 is a little on the high side. And it looks like it's pulling back. Right now it's about 25, so it's just kind of settling back in. So that I'm pulling back, which tells us, okay, fear is not as rampant in the market. People are not out buying a whole bunch of puts compared to calls, because that's really what it's measuring, is the call put ratio. All right. Well, we kind of have that mindset then. All right, this is what's going on in the market. You may see some opportunities for some bullish opportunities. You may see some things for some bearish opportunities. Now, 2 weeks ago, I had the pleasure of being in your class with you. And there were a couple of trades that we put on that are going to help us answer the question, how can we fix a broken trade? Is it always possible to fix a broken trade or a trade gone bad? No, it's not always possible. Really difficult with long calls and long puts. But when you do some spread strategies, it's a little bit easier to try to do that. So I'm going to show you with two of our positions that we got into last week. So the first one we are going to look at is PanW. And I don't know if any of you did a paper trade with me, but this is the trade that we set up. I'm going to zoom in here a little bit. I'm going to leave the RSI on here because I want it to show maybe if we're trading in bullish ranges or bearish ranges on the RSI, as well as, is it headed up? Is the RSI showing that maybe the momentum is moving to the upside? Right now, I'd say it's still kind of in a lower range where typically maybe where the highs for the RSI might be in kind of a bearish situation. But look at this way. PanW. We got in 2 days after this big run-up day. It looked like we had a big run-up and that it ran into resistance again and was rolling over. And we got in while it was dropping here. We did a short, let me verify that. We did a long put vertical. We did a long put vertical on this one with the intent that we were thinking the stock would continue to drop. Well, guess what? Pretty quickly, it violated the trend. Pretty quickly, like 2 days after where I've got this yellow dot, it looked like it was up here a little bit higher. It was like, man, this thing is reversing on us. This thing put in a higher high. We're planning on it dropping, and it didn't, okay? So on this day, we had the opportunity to do what we call a change of polarity, which means change up the trade, try to resolve it. Try to see if we can turn it into something that works and either salvage, decrease the amount of loss we're having, or even possibly turn it into a positive trade for us. Okay. So in this scenario, what did we have to do? We had to go sell our long puts, and we held on to our short puts. Let me show you what the trade looks like right now. And let me collapse a couple of these areas. And here, let me collapse this. Let's just look at PanW here for a moment. So here you see, we don't have the quantity here anymore. The only part we're left with are the short puts. Now, short puts, bullish, isn't it? Yeah, it absolutely is. For that particular leg right now, we on it received $7.80 per contract, which is pretty decent, right? Not too bad. And right now it's worth $2.05. Is that doing what we would want it to do? Absolutely it is. Yeah, we're being able to make our profit with this leg. But the leg we bought, the legs we sold were at a pretty decent loss, okay? And the one thing I want to emphasize is when you decide you're going to change polarity, when you say, okay, I've got to fix this trade, I've got to change this trade, and not every trade can be fixed, you have to account for that you are having to take a big loss with that one particular leg that you're getting rid of, whether you're long or you're short. So on this one, our 165 put, when we initially bought it, it cost $9.80, but when we sold it right here just a few days later, we only got $5.45. So we banked and realized a loss on that. And so $9.80 minus $5.45 left us with a loss of about $4.35 that we need to make up. Okay, I'm going to actually come down here a little bit, give us some room to take some notes in. Okay, so I'm going to just put a minus $4.35 because that was the deficit on that day. Now, when you change your trade, you've got to know that you really think you're wrong, or that the trend changed, you see some technical violation that you're like, oh man, this isn't what it was when we got into the trade. You can't just do it because you're a little nervous, or you know that maybe the price of the stock is near your strike price. Okay, it's like, no, we were wrong. The leopard has changed its spots. Okay, and we have to have enough time that we think, okay, we're going the opposite direction now. Do we have enough time for the leg that's remaining to help make up that deficit? And so in this case, we still have 21 days out here, okay, before this option gets to expiration. So does that give us enough time for possibly that kind of a repair? And the answer is yes. If this were, say, between 5 to 10 days, some traders might be like, I don't know if there's enough time there to really recover that loss. Okay, so it'll just have to be a call that you make. But here with this one, and when we got out, there was actually, more than 21 days, okay? And I'd say, yeah, traders might find that's plenty of time to be able to have it happen, right? To have it make up the loss. Now, right now, we'll do a quick little math. And what we're going to do is just take the difference here. Okay, we brought in 780 initially, so 7.8 minus what it is right now, 2.03. If we wanted to buy back and be done, how much of a gain would that give us? Well, that is letting us know per contract we're up about 577 on that leg. So if we're going to say, okay, let's get a net of everything that's happened to us here. Okay, we'll take 577 and we're going to minus that 4.35 that we needed to make up. And right now, if we were to close everything down, okay, if we went and bought back those short puts, we'd actually be positive a little bit, which would make us happy, of about 142 times 2 contracts. Okay, so far has it done its job? Yeah, so far it's done its job. We don't need to hold it all the 21 days. We might get to a point where we say, you know, I can buy it back for $1. Maybe I'd just be a happy camper and get out of there. Be done with this trade and be happy we were able to get on a little bit, or maybe realize a little bit of gain on a trade that went bad against us. Okay, how many of you have ever tried that, and how many of you think, I think I could do that in my own paper account? I think I could experiment with that. Okay, feel free to answer in the chat. We've got another trade. It went bad on us as well. This one is this microchip. And on this, we're down, you can see we're down quite a bit. Although today it's improving. Let's go take a look at this. This was a short call vertical. Okay, so this was a credit spread. And initially we brought in 70 cents. Now, if we had to go buy it back, it's going to cost us $1.70. So that would put us $1 in the hole if we were to go buy back that short call. Let's analyze the stock first. Let's see if it looks like things have totally changed. All right. I was asking you if you'd feel comfortable maybe trying that in your paper account. Some of you might be. It sounds like you're willing to give it a try. Yeah, that's where we practice, right? A new concept, a new idea, absolutely in your paper account. All right, let's go look at this chart. MCHP here. MCHP. So looking bearish? Absolutely, it's looking bearish. Okay. Let's kind of drill in here a little bit. So we have this 42.50.40 short call vertical. So that I drew a line here. We were looking for it to stay below 42.50. Now, as I kind of put my mouse along here, you can kind of see a little line. We had a ton of leeway here. Well, maybe not a ton. We had some leeway here when we put the trade on. Again, same day. This was the 11th when we put the trade on. And it just kind of moved around, just goes kind of sideways. And so for a while, time decay was working in our favor. Stock wasn't really moving a whole lot, okay? But yesterday, look what this stock did. It had a major push up here. Now, would you consider that a violation of the trend as of the close of the day yesterday? I would say, you know, as we're looking at this, we're going to like drill in on the candles a little bit, because here's our previous low. And maybe this tiny pullback gave us a higher low ever so slightly, okay? But we're looking for it to have a higher high, right? That's the beginning of an uptrend, a higher high and a higher low. So yesterday it didn't really have that. But yesterday, what did it have? Oh yeah, it put in a higher high. So if you were answering this, did the trend change? What do you think? Did the trend change on us? Yeah, I'd say it's had a technical violation, which means, okay, can we do something with this? Can we go reverse polarity? Haven't done it yet, but we're going to right now. I would say because of that, we're like, okay, this bear call spread's not going to work out so good for us. Let's go buy back the short call. We're going to have to do it at a big loss, but hopefully there's enough time, which we have 21 days, to help make up that difference if indeed the stock could change direction, change trend. Now, it could be that it doesn't, right? It could be that it just gives us this first higher high and we decide to change, and then, you know, maybe Monday there's bad news in the market and everything pulls back again and it goes down in that range. We just don't really know. But this looks convincing enough that some traders would say, okay, let's do the reversal polarity. Yeah, some of you are like, yep, I agree. I think it is there. Okay, so let's do this. Let's get rid of our yellow lines and let's go back and see the steps that we would go through. Okay, so it's the long call we want to stay a hold of, this 45 call. It's gone up in value for us, all right? But obviously the short call, that's the one that's gone against us quite a bit, okay? So we're buying it back at a pretty steep loss, right? 550 minus 184, okay? And then we're gonna hold on to this one with the intent that, man, this one we're kind of changing our focus because now we're changing our hat. It's not a short call vertical. We are switching strategies. It's a long call. Now, do you have different rules for your long calls than you have for, say, short call verticals? I would hope you would say yes, okay? You know, a long call, many times if we might look for first signs of weakness or first sign of changing. In this case, we've got 3 weeks. We're hoping that it might edge its way up or even make a big move that we might try to capitalize on to try to change this trade from something that's a loss to something that at least has a little bit of a gain or at least a lower loss, okay? So you've got to change your mentality on what's left. So let's go up here to our working orders, and I'm just going to cancel this. Here's our order we put in to get out if we had a profitable trade. So we're just going to cancel that all together. We don't want it sitting out there anymore if we're going to get rid of one of these legs. And then we're going to highlight the leg we're wanting to change. So we are at this point saying we're selling those long or those short calls. We are going to sell them off. Right mouse click, create closing order. The first one usually has all the legs. So in this case, has both the legs. And then you identify, well, which one do we want to do? Do we want to sell this or do we want to buy this? We, in reality, want to buy the 42.50 back, okay? It's going to cost us, and we're locking in that loss on that leg. That's okay. Our intent is the long call will hopefully make up some of the distance on that. So we'll go ahead, let's get out, but maybe we can get out at the midpoint price. Maybe it'll be a little bit nice to us. We'll see if paper will do that. All right. Did that second time around in a different strategy, was that a little bit, maybe not more natural, but did you follow that maybe a little bit easier because we just did 2 examples in a row? I hope so. Feel free to answer in the chat or to your computer screen or your dog, right? As you're kind of processing it yourself. Okay, that's called a change of polarity. That's 2 different trades that we saw that in action. And honestly, now we've got our long call. We've got to use our long call rules, not our short call vertical rules. Okay, we've changed ponies on a different pony. All right. The market today. SPX, let's see, just real quick. Let's just see if it's still dropping. Or it's up a little tiny bit. I think it was up 0.06%. Now it's up 0.18%. It's nudged up a little bit. So price action here isn't on its lows. It's starting to run up a little bit. As I looked through some different trades that we could do here today, something stood out, which was that we actually still have a lot of bearish trending stocks. Even though we have some stocks that maybe have reversal patterns, some stocks that might be starting to change trend because they have a higher low and we're trying to see if they get in a higher high, kind of like the SPX and the NDX, okay? But let's take a look at our first one here. This one, United Health Group, all right? United Health Group actually had been running really nicely until what? Until their earnings report. And look at that huge gap down. I mean, that stock was sitting up there around 600 bucks. Huge gap down, even below $500. So huge 100-point gap down plus, and then it dropped some more. So this is an incredibly long flagpole. Sometimes when you have a gap, you might include that gap in a flagpole. That one I'm going to say is so incredibly long, it's probably not a realistic flagpole. So what I did is I started my bearish flagpole right here on this candle and drew down. Actually, I might draw down a little bit further on that. Let me activate this, because what I'm going to do is I'm going to kind of go to that lowest point, which would actually be right there. That is kind of a measuring stick we can use with flags, right? Whatever the distance of that flag might be, the potential target that somebody might shoot for. Now, I would say right in here, it's in its flag consolidation pattern, and today it looks like it's breaking out of that. Now, I know the markets are off their lows. This stock is off of its highs as well. If we were to zoom in here, we could say, yeah, it's not as low as it was, but it still is looking like it's breaking out of that flag. So that is an ideal entry point that some technical traders like to take when they see a breakout on that flag pattern. Now we're going to go a little bit further on this because we're going to do a little experiment. I'm going to go ahead, I'm going to duplicate the drawing, and you can either place it kind of on the back edge of the flag, like the top point where your consolidation is for a more conservative target, or you can bring it down here where your eye sees the breakout of the flag and it would give you a little bit more aggressive target. We'll be a little bit more conservative today, so I'm just going to place it there. And if I kind of put my mouse down here, let's see how far it looks like it's going. Looks like it's going to about 368. That's a pretty good size move. expected move, I should say. Now, it's not guaranteed it's going to do it, right? It could come up and go back in the flag pattern. And if so, we would say that's our exit, okay? It's a false breakout. It's not doing what we thought it was going to do. We would quickly close down the trade, okay? That's going to be where our initial exit is. I'm going to grab that, and I'm going to say, you know, if it went back up to, let's just say this has given us about 440. So let's write that down. 440 is when it maybe if it reverses and goes back in, that's where we're going to say, it's not doing what we thought. Okay, so we're going to put a stop there. What kind of a trade do you think you might do with this kind of a setup? It's an expensive stock. That means the options are going to be pretty expensive, right, to work with. And so some people might automatically go, oh, I've got to use a vertical. I've got to use a vertical of some kind, either a short call vertical or a long put vertical, okay? In this case, because we've got a pretty decent sized flagpole and it could move a pretty decent distance, we're actually going to experiment with two different trades. So let's come over here to our UNH. And you know, a lot of traders like to use 20 to 40 days worth of time, 20 to 50 days worth of time for their trade. Now, these May 16s, they're kind of in the short end of that window, but certainly enough time to put on a spread, okay? We are going to do two debit spreads here. One, we're going to construct very conservatively, which will be the first one, and the second one, we're going to construct it more aggressively, okay? So let's come in here. If we were looking at this, let's see if these numbers still make sense. I was looking at doing the 415, 410. Okay, so 415 is consider our at the money right now. Okay, we just do right mouse click, buy vertical. It's got just a $5 white spread here, which is great. That was just at $2. I'm going to move it back to make our math easier. Even though you probably would want to get filled at 2 cents cheaper, we'd take it. Okay, but we'll just lock it in. And so with this one, we're saying, okay, stock, we need you to move beyond the short strike price, which is at 410. So we definitely need some movement there. It's going to cost us $2 to do what? To hopefully gain $3. Okay, so we're basically saying, yeah, you've got to move a little bit for us. Let's go see where 410 is. We go back to the chart and I put my mouse here and I say, where is 410? About there. There's 409, 411, so about there. Is that a long move from where the stock is now? It's really not. The low was 412.02 earlier. That's just a little bit beyond that. Okay, so I would still say it's a fairly conservative target on that. Yeah. Let's do this. Since we can risk $2 here, we're going to do two contracts. Okay, and we're going to say when we get a chunk of our $3, we're going to get out. Okay, what is a chunk? You get to decide. Is it 50%? Is it 60 or 70 or 80 or 85%? You get to choose, okay? And some people will typically get into a rhythm where they say, okay, usually this is how I want to do it. For our purposes here today, let's go ahead and let's go 75%, okay? So if we can get 75% of our $3, that says, hey, let's go add $2.25 to the $2. That's where we would want to buy it back. We're not waiting to get everything, okay? We're saying, hey, you move a little bit for me, move a bunch for me. We're going to be happy. We're not going to hold out to the bitter end trying to get every last penny out of the spread. We're more concerned with capturing profit if it gets to go there and be profitable for us. We're happy to capture it and then just move on to a new trade. Okay, so we're going to do a first trigger sequence here. We're just going to do one exit order. So we're going to just say create opposite order. And we're going to take that 225 and add it to our true dollars right here. That's going to give us 425. And that's where we're going to say, yep, we're happy to go buy this back. All right. We'd want to make that good till canceled just to make sure. And now I'm going to unlock it because if we can get in a penny or two cheaper, that would be great. Oh, it's gone up on us. Well, we're going to go ahead and submit it. I'll make sure by the end of the day we get it through there, or probably shortly after our session if it doesn't fill. All right. Any questions on that? Okay, so that's trade number one, which I'm going to say is a little bit more conservative. And let's put it in the trading a smaller account bucket. Now, somebody else, if they said, you know, I like this flag pattern, I like that there's a big target down there, maybe constructing something a little bit more aggressively instead of trying to hit a single, maybe hit a double, something a little bit more profitable. Okay, so the other trade we're going to put on together is we're going to go out in time a little bit because we want to give the stock enough room to maybe drop down more into that target area where the flagpole is. So we're going to use the May 30s. Unfortunately, they have a lot of open interest here. And we're looking to do here, we're looking to buy the 505, and our hedge leg here is going to be the 400. Okay, 505. Yeah, 505, 500. And you can see it, they're way out in the money right now. These deltas are much lower. Okay, what does that mean? Stock's got to move a lot more. If we're going to say buy vertical here, stock really needs to move a lot more, right? It's got to get below 400. Well, that's about a $16 move right now. So we want to make sure we give ourselves enough time. What would I'm going to use air quotes, what would we have to gain in this trade? We're going to risk 163. So 5 minus 163 gives us about $3.37 of potential max gain. So we're risking a smaller amount to make a significantly greater amount, not quite 100, not quite 200%, but significant. But we're going to give it more time, and we're going to recognize this is more aggressive. And again, if UNH goes back up into the flagpole, we'd want to get out of the trade. It kind of closes there. Okay, so some people might want to wait. Did it just tick up there and fall back down, or is it really closing in there? Okay, so this one we're not risking quite as much, and so we can do a little bit. Actually, with our $500, I think we can only do two contracts here as well. So we'll go $500 divided by 163. We can barely do 3 contracts here. Okay, so we're going to do 3 contracts and stay within our risk tolerance. Okay, I do want to point out not everyone would feel comfortable with the second trade because it's more aggressive. So if you're somebody who's like, no, I like the ones that you set up really close to at the money, not a problem, right? That's kind of like what our other trade, our first initial trade was. But you never know. I could be back in a couple of weeks and we can follow up on these trades as well. So let's go ahead. We'll do our first trigger sequential. We'll create an opposite order. How much of our potential gain of 337? Oh, I didn't mean to click on that. Let's stay back here on this. First trigger sequential, I just wanted to create an opposite order. We weren't really going to analyze it. How much of the 337 would you be happy with? Okay, knowing we're looking for it to maybe move the distance of that flagpole, a little bit more aggressive of a move. What if we took 3.37 times, what if we said 60%? Okay, would some of you be satisfied at 60%? If you are, then you have to do the math right. Let's clear the calculator out here. All right, 3.37 times, if we've captured 60% of it, then that would give us a value of $2.02. Okay, let's add 202 to the 163. So that's going to give us, what, $3.65. And we're going to say we'll buy it back at that point. We'll be happy campers, right? And lock in a move, if it were to go there, that is a little bit more of aggressive of a target than what we did on that first one, okay? You see the difference between the two? One's shorter in time, a little bit more conservative with the strike prices. This one is a little bit longer in time and definitely needs the stock to move down about 17 bucks, okay? But we're giving it some time to do that. So it's just a different approach of how some people might work with this. We'll put that in our trading a smaller account bucket. All right. Next up, let's go pick on something else that's having a hard time. Actually, before I do that, I want to make sure all of you know some of the new things we have out on YouTube that you want to be aware of. Let's jump over here for just a moment. I hope you're a subscriber to our YouTube channel, because then it makes it really easy for you to find our content, our information, set reminders if you want. And so you're probably aware of our playlists that we have here. I'm just going to do a quick refresh. And so for Barb's trading a smaller account, let's see, where did it end up right now? I think it's down here a little bit, kind of by down here a little bit. I missed it. All right, Barb's trading a smaller account. Well, we'll say you want to go to the options. Getting started with options, okay? You can come down here, find the playlist that you're looking for. That was not a very good example. I apologize. In any case, what I wanted to show you here is we're doing some new short videos. So shorts, you come over here and we've got 5 new short videos. Typically, they're just really short, like 2 or 3 minutes-ish, okay? Outlining concepts. This one can be really handy for people that are trying to figure out, how do I identify the trend, a short-term trend, an intermediate trend, a long-term trend, okay? And be able to use that information in their technical analysis, okay? So we'd love to have you follow along with these new videos as well. Okay, if you haven't subscribed, it'll just make your life easier. That blue YouTube button on the bottom right is what you can click on to subscribe. And if you click it a second time, it unsubscribes you. So you want to just do it once here. All right. And thank you, Scott, for throwing that link out there for those short videos. All right. Next up, let's take a look at this next one. Okay. Nike. Let's kind of zoom out here on Nike, see what's been going on. Well, it had been having some difficulty, right? We're seeing it trend below that 10-period moving average, bounce down, bounce down. It had some sort of news where it gapped down, and really the stocks had a hard time getting above 59. It's trying, and what's going on right now? It's bouncing down off of it again. So for a bearish entry, some traders might look for a bounce down off of a moving average, or a resistance down, a bounce down off of some resistance like this 59 is. And so technically that's what some traders might see right there, as far as saying, all right, let's sell something. Hopefully we can sell something that's above the resistance line, okay? If we were to sell, say, a short call vertical. So let's go check it out, see what we can do here. So we come over to Nike. We are going to go back to our May 16 options. Nike is really pretty liquid. It's already traded 9 million shares today. So oodles of open interest and volume here, you can see. And I like to keep those columns up so I can see when I'm approaching a trade, hey, there are lots of contracts being traded here at this strike price. And so on this, we were looking to do, we'll see if it still makes sense. We've got, I had it set up to do a 61.62, okay? Let's go ahead and we're just going to say sell vertical. Notice we're selling a 28 delta, okay? It's a 28 delta. Many times we'll focus for a 30-something delta or a high 20-something delta or maybe even a low 40-something delta. And there really were some choices here, 40, 34, 28. On this, with a dollar-wide spread, somebody that's trading a really small account, you could actually do that trade, right? You could, what? We have $1 minus 23, which is 77 cents, $77 risk per contract. So in here, we can actually do 5 contracts. But it's nice to be able to actually find some stocks that do have $1 increments. If you're like, man, I can only do 1 or 2 or 3 contracts. It's nice to be able to have some of those. So Nike affords us that possibility. And of course, there's lots of trading activity here. If we're going to risk 77, we could actually do 5 contracts here. So we're going to put in our 5 contracts. And we're going to do the same thing. What if we get a chunk of say, this 23 cents? Let me go ahead and lock it in. One, I want to make sure it's a good enough return, right? Because we can identify something, but it's like, okay, is this vertical worth it? Or doesn't meet my qualifications? So we'll take our max gain of 23, divide that by our max potential loss of 77. That's about a 29% return for 21 days. Yeah, so many traders might say, yeah, that fills the bill there. I'm happy with that. We're going to go ahead and we're going to go through with it. And the same thing, we're going to say, when we get a chunk of it, let's get out. So we'll create our opposite order here. On this one, what if we can get 70%? Okay, if we get 70% of the 23, only 30% is left. So we're going to say 0.3 times 0.23. And that says, okay, go buy it back at, let's just round it to 7 cents here, okay? So we're going to change that. We're going to say 0.07. If that shrinks with time decay works for us, the stock either bounces down or even goes sideways for a little bit, then the trade will be working for us. We just need it to do what? We need it to stay below 61. As we come back and look at the chart here, where's 61? Well, it's a couple of dollars above that 59 resistance area, which technically is a place that it's helpful if you can trade above that, right? If you can sell that strike price above it. All right. Again, on this, what we're going to watch for as far as an exit is a violation of trend, okay? If we see the stock, if Nike gets some momentum and busts through resistance and forms a higher high, let's say if it were to bounce Monday, or later today, maybe it bounces or busts through the resistance, then we would have to look at that and say, okay, is it significant enough that it looks like it warrants changing the trade? At this point, man, really, this thing can go sideways. It can drop down like it looks like it could do. And it can even go up a little bit. It can go up above to 59, 60. We're looking for 61 for it to stay below. So we can be off in our forecast for the stock and still have a profitable trade working for us. It requires a little bit of patience for that time to decay, especially if it just kind of goes sideways for us. If it were to drop, that makes locking in that 70% a little bit more feasible. All right. Any questions on any of these trades? We did 2 long debit trades on PanW, being a little bit more, or not PanW, United Healthcare. We've done this Nike trade. If we had time, which we don't, this is the setup I'll show you here, is NextEra Energy. And on this one, it looks like maybe the highs are getting a little bit lower on it. It's not looking quite as desirable as it was earlier. My thought was, if it were to violate this support level, which is a couple of years old, if it were to violate it, because it's not doing so good after earnings, if it were to come down significantly, close below here, then we might consider doing a conditional order on it, but not unless it really drops through. Okay, so we'd make that conditional. All right, now I don't think there's a survey here today. Sometimes we get them, sometimes we don't. Okay, so I have not seen a survey pop up. However, if you found this helpful and useful and you think, hey, I think others would find this helpful and useful as well, then I would encourage you to hit that like button on the way out. That lets others know that, yeah, there's some good content here. It might be useful to you. Somebody's starting to study the same thing, trying to build their smaller account. They'll know that you had you'll know that you led somebody to a session that might be helpful for them. Okay. So we did a couple different types of trades. That Nike trade, we did a short call vertical. So 1 credit spread, 2 debit spreads, fitting kind of the type of strategies we like to do in this class. Okay, so if you haven't subscribed, subscribe. Follow me on X, Connie Hill CS, and then found it useful, hit the like button on the way out. Now to my time. Coming up next is advanced technical trading with advanced technicals, I think is the technical name for that. Karen Renee is going to be up with that class right at the top of the hour. So we'll see you back here. Take a quick break and we'll see you in 15 minutes. Thank you, everyone. Thank you, Scott, for your help as well. Bye-bye.